So you're out, sat drinking your overpriced coffee and enjoying the atmosphere, and wouldn't you know it, you're 30 minutes away from home when China bans Bitcoin again. The Bitcoin price is plummeting. Instead of breaking the speed limit or daydreaming about a missed trade, with a little preparation, you can trade Bitcoin options from anywhere with a data connection. Deribit offers a mobile app accessible within their API or application programming interface. By accessing your account and pairing the mobile app to the API key, the app is securely accessible using the fingerprint scan on your phone. These are the same fingerprints used to unlock your phone and are not saved by the Deribit app. Now out of beta with the Deribit testnet, the app offers both options and futures trading in the July 10th update. Both are available in the top left of the dashboard, and thanks to the API connection, responsiveness on the exchange side is just 1 millisecond. Once logged in, you land on the dashboard. A summary is available which shows stats about your account, equity in and out of positions. In equity, you have the total balance of your account in Bitcoin. Available balance is the total Bitcoin you have available to use which is not in a position. Initial margin is Bitcoin which is reserved in your account for a position. Please bear in mind that the other Bitcoin in the account is used as margin balance. Profit and loss, the unrealized profit and loss of your current positions. Session profit and loss from closed positions. You can use this as margin in other positions as if it were equity in your account, but cannot be withdrawn until positions are closed and the futures are settled. Now, settlement is daily at 0800 UTC or GMT. From there, your realized profit and losses are transferred into equity. Cash balance is equity and realized profit and loss without the session unrealized profit and loss. Margin balance is the sum of all Bitcoin in your account available to be used in positions. This includes session profit and loss, both realized and unrealized. If you closed all positions and settlement occurred at 0800 UTC, your margin balance would be equal to your equity. The MT margin or maintenance margin. This is the margin required to maintain your position. A larger position means a higher maintenance margin. As your positions are with 50x leverage, think of this as the level your margin balance must exceed to maintain your line of credit before the exchange begins liquidating your position. The session unrealized profit and loss, this is the unrealized profit and loss since the last settlement, and again this can be used as margin in positions as if it was equity in your account, but cannot be withdrawn until positions are closed and the futures are settled at 0800. And the delta total. This accounts for both futures and options delta, the futures session profit and loss, the cash balance, and subtracting the equity. For the sake of brevity, please see the website FAQs for details. The link will be in the description below. Futures is the first item on the menu in the top left. Designed to appear like the web UI, it has a simple but effective layout. At the top of the screen is where you select between each contract type. In this case, expiring the 27th of July and the 18th of September. While, for example, the July 27th futures can be held to expiration, your realized profit and loss will be added to your account equity and be able to be withdrawn at 0800 UTC. Below the contract selection is the bid and ask order books, with bids on the left in green and asks on the right in red. Like the web UI, we're able to open a position where we either select the number of contracts we would like at $10 per contract, or the amount of Bitcoin itself to invest as initial margin into a position. Information on margin requirements will be discussed in a later video. Current data is available on the exchange website. To the right of the order execution buttons are the order types, including limit orders with 3 different rule sets. Good till cancel, where the order remains on the book until it's cancelled. Fill or kill, where it will execute an order immediately, filling the limit order entirely, or it will cancel all of the position. Or immediate or cancel, where it fills an order immediately for any percentage of the position, even partially, or it will cancel the order completely. There's also the stop limit order, which places a limit order once a price threshold has been met, and a market order, which will immediately buy the amount of contracts or Bitcoin you've decided to invest in a position, regardless of order book depth and slippage. As this is a taker order where the user does not add to the order book but instead matches against it, they will pay a fee of 0.05% of their position. Instead of the 0.02% rebate paid to the makers, limit orders which add to the order book. Limit orders can also be post-only to prevent immediate execution during a fast-moving market and ensure being paid the fee rebate, or hidden so they don't appear on the order book at all. However, this will cause your order to be executed with taker fees instead of maker. Let's place a one contract limit order as an example. This will be a limit order so we earn the maker fee rebate and we allow the trade to come to us instead of chasing the market. Now while we wait for our limit order to fill, we can navigate to the Open Orders panel via the bottom of the screen. This is where you can view both your open orders and exchange executed stop limit orders. On the left it shows your instrument, which in this case would be the future's position expiry, the order size and price, and extra detail can be accessed by tapping the order row itself, allowing the user to view the margin requirement of the order, any partial fill, and either edit or cancel the order. The order has now filled, so it will no longer show in open orders, but positions, as the limit order we placed was matched with a market order by another trader. Tapping the row for details shows the same parameters as the web-based UI in a more compact view, including the ability to close a position partially by tapping the order buttons below both limit and market order. At the bottom of the screen there are three tabs: Chart, Recent Trades, and More Information. Pressing Chart shows a Japanese candlestick chart along with the market daily high and low, daily volume, and the last price, a market order matched with a limit order. For convenience, the current order book is shown as well. As a tab, this allows the user to select between both available futures contracts at the top, and tapping Depth above the chart will show a graphical representation of the order book, and tapping the order book will show a ruler where the user can tap to the left and right, showing total and the specific bid. The next tab shows Recent Trades, where recent executed market orders are shown from all traders including yourself. And finally, More Information, where the account summary mirrored to the dashboard referenced earlier, and a trade summary for the futures product is shown, including data such as the open interest, which is the sum of all open positions represented as BTC, and the premium, the difference between contract and index price extrapolated to yearly interest. Moving back to the dashboard here. Most appealing of Deribit and a major draw is the ability to trade Bitcoin options via the mobile app. These are available via the drop-down menu in the top left of the screen and the third row. You can buy put options, which are options that allow you to sell the contract at a specific price in the future. Generally, you would buy these if you were bearish on the underlying asset, or call options, which are options that allow you to buy the asset at a specific price in the future, typically if you are bullish on the underlying asset. And both these are available with strike and expirations on 5 different dates selectable above, like the futures exchange portion. This column on the left is the strike price. This is the settling price of the contract. Now, since these are European style options, they are exercised only at expiration. These are also cash settled options, where the value of the profit or loss of a trade will be paid in cash, converted to Bitcoin. To calculate your profit or loss for these options, the formula is as follows. For a call option, it would be the BTC price at expiry minus the strike price minus the option premium. So if the Bitcoin price is lower than the strike price, the option is out of the money or worthless. If the Bitcoin price is higher than the strike price plus the premium, then the option is in the money and you're gaining a profit. For a put option, the formula would be a strike price minus the BTC price at the expiry minus your option premium. So it is the opposite case for put options. If the Bitcoin price is lower than the strike price minus the premium, then the option is now in the money as opposed to out of the money with a call, and you are gaining a profit. The premium is the fees paid to exercise the option. This largely depends on IV or implied volatility. Let's do an example on the interface. I would like to buy a call option that expires the 27th of July, giving me the right to buy 1 Bitcoin at $7,000. I, being the trader, would buy this believing the price will be above $7,000 on the 27th of July. If the price is below this on the 27th when the option expires, the call expires worthless. Now, due to low IV, the premium is very low on the option. To calculate the break-even price for my call option, I would simply add the ask to the strike price. So, if on the 27th of July, if the Bitcoin price is higher than $7,000 plus the ask price which I paid to buy the contract, then any difference above that is pure profit. And for options there is no maker fee rebate at this time. The fees are 0.04% for maker or taker regardless. You may have noticed here, these contracts at $10,000 strike price are very cheap. It's less than $10 for a Bitcoin. However, this is because they will be worthless if the Bitcoin price does not at least reach the strike price. Unless Bitcoin reaches $10,000 by contract expiry, you get nothing and the trader offering the ask collects the premium. This is an option strategy where the trader is hoping to collect many of these and farm the premium. For the sake of brevity, I'll discuss other trading strategies in another video. Now, like the futures portion of the exchange, the menu at the bottom of the screen allows you to see open positions and orders, and your order history is on the right. Coming up in a later version of the UI and proposed for the end of 2018 is a strategy builder allowing more complex trades based on interactions between both call and put options, such as a covered call where a matching call is sold for the premium rebate instead of selling. More examples in that trading strategies video later. Back to the dashboard again. There is also the ability to deposit more BTC via the app directly, just in case you're surprised with low account equity while you're on the go. Withdrawal functionality is not yet available in the app, but instead perfectly functional in the web UI. It's important that I reiterate this is a companion app used to connect to the web-based exchange using the API and not a separate account. And there's an options menu in the top left. You can use this to select your preferences for push notifications, helping you keep up with your positions while you're on the go. That concludes the video guide for the Deribit mobile app version released July 10th, 2018. More features and functionality coming soon. For questions, please visit the Deribit Telegram group where the exchange owners are happy to answer your questions. They also have a Twitter account with the tag @DeribitExchange. Links to both of these will be in the description below. Thank you very much for watching and cheers. I'll see you on the exchange.